Singh to try and get a sense of how he's looking at the market. He's from Angel One, of course. And Amar, great having you. Very good morning. Give us a sense of what you're looking at and how you're looking at the index first.
Yeah, very good morning, and thank you for having me on the show. See, what we are seeing here in the index is that index continues to remain positive. There's no doubt about it, because if we see the way the index has pulled back from the lows in the last week of July, and it also significantly traded as high as 24,770 plus. But the key challenge which I see is taking that out as a resistance. I've always been saying that 24,600 and 24,800 zone, that's a very crucial zone to watch out for. Why I'm saying that? Because if I look at the index on different time frames, so when I'm talking about it, I'm specifically referring to the monthly charts. So there it clearly shows that upside is going to meet with selling pressure. There's no doubt about it as far as the index is concerned. Also, what's happened is that some of the technical indicators on the daily and the weekly charts have moved into overbought territory, whereas on the weekly charts there's some sort of weakness. So till the time we don't see it consolidate above the 24,800 levels, I would say we could witness some choppy trading sessions. But yes, on the downside, if you are somewhere around 24,400, 400 is a very strong support. So it's this 300, 400 point range where Nifty is likely to trade in till the time we don't see it consistently breach above the 24,800 levels.
24,400 to 24,800 are the levels we're looking out for on the upside and downside for the moment before we start to break out. Amar, just trying to get a sense, sectoral bias. We've seen some churn which has come our way, and that will likely continue. So what are the sectors that are looking in favor at this point in time?
See, if you look at a particular sector, so pharma is one which has done quite well. So if we look in terms of the sector, pharma sector has been positive, and we also need to remember one thing very clearly, that it's going to be not all the stocks in the sector. There'll be specific stocks which could be performing. So if I look at the pharma space, I would say the way Aurobindo Pharma has led its rally continues to remain strong on the charts. But yes, we could witness some profit booking. Biocon, if you see, it's not gone anywhere. So it's been trading in a clear-cut range. If I look at Cipla, again, it's trading in a range. Divis has been on a very strong up move. Trend is extremely strong. So what it effectively means is that this is a sector to keep a close watch on, and you have to accumulate on corrections. If I look at Dr. Reddy's, again, it's something which is not worth at least investing the way the current trend is. Gland Pharma, again, very strong and positive. Now, coming to the other sector, which is again of interest, we've seen some pullback in the IT space, and then we saw that there's some sort of correction. So if I look at some of the key plays here, Coforge continues to remain strong and positive on the charts. So any pullback is a buying opportunity where we see crucial support somewhere around the 1680, 1700 levels. That's a strong support. It has an upside potential towards its all-time highs, which it had made somewhere around the 2000 level. So it's very strong on the charts, but it needs to sustain above the current levels. Then if I look at HCL Technologies, again, we witnessed a sharp rally of almost 30%, but now seeing some sort of tapering off. So if I look at, for example, Infosys, again, similar pattern being witnessed, because Infosys isn't likely to breach the 1230, 1240 zone. So the rally which was there in these IT stocks, that seems to be tapering off right now. But if they continue to, for example, Infosys, if it starts sustaining over the 1200 level, then it could witness a significant rally. Otherwise, it could peter out. So this is one sector. The other sector, if I look at, is something which I like, is from the auto space. So if I look at the auto stocks, Ashok Leyland is one which is quite positive. It did witness some sort of opportunity. And then there was, if I look at the rally in Ashok Leyland, it has been from almost 140, 170 countries trading, but one needs to watch out. 180, 182 is a level to watch out for. If it's able to take out that level, then we could witness some real sharp move in this space. As far as private sector banks are concerned, I would say you can definitely look at some of the banks on the private sector space. Even small banks are positive. City Union Bank is one of them. has breached important and crucial resistance zones currently around 210, 15 odd level, has the potential to rally towards its all-time high. So you are seeing that across more, and defense is definitely another sector. If I look at the stocks, the way the stocks have rallied and continue to rally. So HAL is one. Again, it is approaching a crucial zone of resistance. So entering at the current levels, you might not have a good, I would say, risk-reward ratio, because if it takes out the 5,000 level, somewhere around the 5,000 level, then we could witness some sharp rally in the stock towards 5,200 odd levels. But the trend is, and the structure is strong. So these are some sectors one can keep a close watch on.
All right, plenty to speak about. Thanks for that setup, Aamar Deo. Let me go across. Let me quickly try and cover pharma and healthcare first off with you. Your top picks from within this space, anything that's looking strong on charts?
So Gland Pharma is one stock which is definitely looking positive on the charts, because if we see the way the stock had corrected from almost 4,000 levels, and then it had corrected to towards the 860, and then it has bounced back. Currently, it's around the 2,600 levels. What we are seeing technically also is that the trend remains strong and positive, and volumes, when the stock witnessed a significant jump, or I would say a gap, there was significant volumes, and then markets have not taken those low out, despite the markets, overall markets witnessing some sort of correction. So the trend remains positive if the stock is able to sustain, because currently, if you look at the stock earlier had some sort of resistance around the 2,300, 2,400 zones. So that has been taken out. So there is a possibility of a strong upside in the stock towards the 3,000, 3,200 level, but that could be on corrections. But overall, the structure of the stock is very positive. So one needs to keep that in mind.
Amar, do you look at Vodafone from a technical point of view?
Yeah, see, Vodafone, I was just listening to what Sandeep was talking about, that it's more of a investor or a trader risk appetite which is in the stock, because as he rightly said, that profits are not forthcoming, and that would really take a lot of time. But having said that, if I look at it technically, technically what's happening in the stock is that somewhere or the other, the stock recently rallied towards the 15 levels. And earlier, if I look at in June of 2024, it had made the high of almost 19. So clearly it tells me that the stock could trade between the on the upside 14, 16. That is a level of resistance for the on the upside, whereas on the downside, the stock is strongly supported around the 8 to 9 level. So it's more of a range play in the stock. The rally which was there, where the stock almost doubled from its lows, that is over, and the stock could go in for some consolidation.
Okay. All right. What about Bharti and the like? Do you have a view there, Amar? Bharti, I mean, Reliance is obviously the larger conglomerate, but give us your views on both of those as well. And Indus Towers.
Yeah. So if I look at Bharti now, we need to understand that the stock had a spectacular rally. The stock turned out to be a multi-bagger, and we're seeing that the stock is now in consolidation. So if I look at it on the upside, definitely seems to be capped around the 2,100, 2,200 levels. So that's a zone of resistance for the stock. Whereas on the downside, the stock is strongly supported around the 750, 1750, 1,800 level. So it's more of that I don't see the stock getting into a very strong uptrend momentum very soon. So the stock could witness continued consolidation. If I look at Reliance, which you talked about, so Reliance is what's happening in Reliance is that Reliance has been trying to inch above the 1350 odd levels, but somewhere the structure of the stock from a longer term perspective, that continues to, I'll not say negative, but that continues to clearly display consolidation. And that's what we've been witnessing in Reliance for a long period of time, since it made a high of 1608 in July of 2024. Then the stock went in for consolidation, corrected towards 1300 odd levels, 1100 odd levels, and then again rallied towards 1580. So somewhere or the other, Reliance is going to trade in a consolidation way. Till the time we don't see it sustaining over the 1350, 1400 levels, it would continue to consolidate.
Okay, all right. So those are the couple of stocks which ought to be on our radar. Outside of these, you've got also Bosch and some of the auto component plays. Bosch, again, growth was very strong, Sandeep. Margins also came in strong. You had Lumax Auto as well, where it clocked the best ever quarterly